Welcome back to EDS, and in this video we are going to take a look at how you can write your own options contracts, sell premium, and generate a consistent return year on year in your portfolios. So the first thing we want to do is let's just have a look at our watch list. Something to keep in mind, last night was the NVIDIA earnings announcement, which came in better than expected. So in fact, let's go straight to NVIDIA. So as a good rule of thumb, it's always a good idea to stay in tune with what's happening in the market and in the macro environment as a whole. So Nvidia had its earnings last night. So as we can see, it's got an IV rank of 34.8. If we have a look at the chart, Nvidia did beat earnings expectations. However, the market still opened down. To be fair, everything beat expectations last night. We are currently down from the open. V rank has dropped. To be completely honest, I was looking at placing a earnings trade last night on Nvidia. I just didn't get time to put that on. However, I'm confident if we did, probably would have worked out pretty nicely for us today. So with that in mind, we can take a look at the broader market in general, see what effect that has had on the overall market. Not too much difference in the SPY. If we look at say the VIX, as you can see, the VIX has come down a little bit today. I think partly that is due to the increased volatility around earnings now having dissipated since last night. So anyway, let's carry on. We were looking at futures with options. Let's go to the BATS watch list. Why not? So we want to see where we are in the cycle, in the expiration cycle. So we want to avoid the weeklies, which is denoted by these orange W's, and we just want to stick to the monthly expiration cycles. So the next monthly expiration cycle for us is September 18th, which is 19 days away. We want to be out of these positions by 19 days, if I'm being honest with you. So we're not actually going to pick this September 18th expiration. We're going to go to the next one, which is October 16th, which is 47 days out in time. So we want to be at the 47-day mark, okay? So let's go back into our watch list. We can filter out everything that has earnings within the next 47 days, right? We do not want earnings whilst we're in a position, because earnings can cause problems. If you do want to make an earnings play, there is a way to do that, but it's completely separate. What we're talking about today is the basic bread and butter of your portfolio. So if we look here, the BAT's got a lot of futures. Well, everything is futures. So let's just go on to another watch list. Let's go to the default watch list. So we've got the VIX futures, we've got Bitcoin, ETH, we've got the gold miners. In fact, gold miners could be a nice trade. GDXJ, we've got an IV rank of 83.2, and this is exactly what it looks like. You just want to log in and see what the market is putting out there, what is being made available. What you do not want to do is come in on a Monday morning and think, for whatever reason, I want to trade TLT, right? And even though implied volatility isn't really in your favor right now, for whatever reason, you just brute force a position on TLT, and over enough trades, it won't work out well. So that's what you don't want to do, right? So if you go back onto our watch list, we want to take what the market is giving us right now. So GDXJ, it is a bit light on the liquidity. However, it does have a very high IV rank. So I think we can take a look at this manually. So if you go to the October 18th expiration, let's have a look at the spread here. 2.64, 2.68, 0.13, 0.17, 0.79, 0.83. Yeah, they're a couple pennies wide, which is completely fine. That's okay for us. So let's have a look at the deltas. So we want to be somewhere around a 16 to 20 delta. So if we just have a look at the 17 delta at the moment, and then we look at the 17 delta on the put side, the closest to a 17 delta on this side is probably going to be the 19 delta. So we go with the 17 and 19 delta at the 42 and 53 strikes. So if we have a look at the numbers, so we can see here that we'd collect $109 in premium up front, and it's going to require about $480 in buying power to put this trade on. And if we do put this trade on, we'd have a 67% chance of success, or a probability of profit even, by expiration. And if we do take profit early, say around the 50% mark, we've actually got a 99% chance of it reaching 50% profit target at some point within the next 50 days. So this position is actually looking fairly nice. We do have a position already on in GLD. Let's have a look at GLD and see what's happening with GLD. So GLD, okay, we've already got a pretty nice position on GLD. So if we go back into GDXJ, have a look at the order. So it'd be 42 and 53. So if we go onto the chart, let's just mark out 42 and 53. So 42 is there, and 53 would take it to there. Again, clean. It is a clean trade. I do like it. I am just slightly cautious of the fact that we already do have a gold position on. And we always want to make sure our positions are well diversified. We do have some currency futures positions on. I think it wouldn't be a bad idea to get involved with GDXJ because the IV rank is so high at the moment, at 84.6. I'm going to take a look at that in more depth after the video. But this is a good trade. I definitely like this trade here. If you don't already have a gold position on, by all means, this is a good trade. But I am going to come back to that at the end of the video. So this is basically an example of how you can find a position to put. Everything is systematic. We found GDXJ. It wasn't that difficult to find. We've identified some strikes. We've got a very good probability of profit and an even better probability of hitting, 50% target level at some point within the next 50 days. It doesn't require that much buying power. It only requires $478, which isn't a lot, to be fair. So this would be a good position for someone who even has a smaller portfolio. Even say with a $5,000 account, you could put this position on. If this was still a bit too much for you in terms of buying power, you could always just turn it into an iron condor. So let's say, for example, you buy along a dollar above and below your short strikes. All of a sudden now our buying power has dropped from almost $500 to only $79. You do collect a lot less premium up front, and in this particular instance I wouldn't actually recommend doing this. I'd go a bit further out than instead of just $1. However, just to show you an example in theory how it works, you collect less profit, but you also use a lot less buying power and you have a much higher return on capital this way. And we're not actually going to go ahead and do that. I do like the look of this naked position. So after the video, we will be doing some calculations and seeing if we can fit this into the portfolio. For right now, after the earnings announcement last night, most of our positions have turned green. Futures, Australian dollar and euro, we've only just put them on 1 and 2 days ago. 99 days left on those contracts, so we're not worried about that at all. CMG is the only other one that seems to be causing a bit of an issue, but even still, if we take a look at it a bit closer, it's not really causing an issue. We do still have plenty of room from our strikes. Again, this is just a case of theta decay. It hasn't had enough time to do what it needs to do, but our strikes haven't been breached and everything is looking good on that front. So Overall, on the entire portfolio, we're very, very happy with how it's looking. We also now have the opportunity to add in a GDXJ trade if we don't actually find something else that's juicier further on in the watch list. One last thing, so once you find these positions, you need to know how much buying power to allocate to these positions, right? How big do you want your positions to be? The way that we calculate that is by looking at this position sizing template. Now, if you guys want to get your hands on this template, just drop me a message in the Discord group. Link to it will be in the description below. But the way it works is you put in your portfolio size. So let's say if it's $17,500, and let's say the VIX is at 32.7. Everything will then be automatically calculated for you, and all you need to do is then just follow the guidelines. It will tell you how much of your portfolio to allocate to short premium, defined risk trades, undefined risk trades, and then of course it gives you an explanation of everything below. If you want to get a copy of this, just drop me a message in the EDS Premium group. So what do you get inside the Premium group? Well, you get a full course that will teach you everything you need to know from start to finish. As well as that, you will also get access to all of our portfolios. So whenever we put a trade on, you'll be alerted. And whether you've got a small portfolio, large portfolio, you can go ahead and copy us so you can learn and earn at the same time. Whilst being able to do that, you can also chat to me directly, speak to other traders inside the group who are all on the same mission. And there is a 100% money back guarantee. So you can go through our full course, follow our trades for a full entire 6 months. If you haven't been profitable or you still don't know what you're doing, we'll work with you for free until you do, or you can request a full refund. So it's completely risk-free from your point of view. And right now, it's only £1 a month. The price of this will increase. For every 5 members that join, the price will increase. However, no matter how high the price gets, you will always be locked in at the lower price, at whatever price you get in at. If you get in at £1 a month, you will only ever be charged £1 a month, unless if you were to cancel and then resubscribe at a later date. That's it. The link to EDS Premium will be in the description below, launchpass.com/EDS/premium, and I'll see you inside the Discord.